Good morning and happy Easter to everybody. This is Rustin Edwards, based in Geneva, with my illustrious smoking commentary colleague, Matt Stanley, in Dubai. Good morning,
Morning.
Matt.
Yeah, morning to everyone. Happy Easter. It's Tuesday after a long weekend, which will mean that the UK are slowly getting their way out of bed and nursing probably a hangover with some soggy sausages that were cooked yesterday, I'd imagine. First barbecue of the season it used to be for me. Still a bit cold, but that's what the Brits do best, is standing outside under an umbrella
Yeah, the
cooking.
weather has been actually fairly chilly 10 days here in April. You wouldn't think it was April, but then again, last year we did have snow.
Yeah,
But c'est la vie. But this is
yeah,
episode
global
10 of the
warming.
Smoking Barrel, the last episode of season one.
Yeah,
And
yeah.
we got a whiz banger going on today. So Matt, what do you see happening this morning here?
Well, it started, I mean, obviously markets were open yesterday in the US, but it started relatively subdued. Obviously, there wasn't hardly anyone was in, no liquidity really. But yeah, look, Brent hasn't really moved since we spoke last week. When Monday, just after the OPEC cuts, crude was up $5-6 a barrel, 8% at one stage, and it hasn't really moved since. It's just clinging on to the mid 80s. TI's above $80 a barrel, Brent 84.93. I don't know. It's just, what was that headline worth? We said last week it's worth $5 a barrel. You could do an equation, $5 a barrel, and there were 1.6 million barrels. So what's one barrel of oil worth? I'm not very good at maths. I shouldn't really say that. I used to be a broker. It's worth something. Sorry about that, but we could probably work it back out. How much that would be worth.
The daughter in there and let her count by her hands.
Yeah, it's early, mate. It's 10 past 10 in the UAE. No one's up. Look, sorry, joking aside, it's back in the comfort zone. There hasn't been any real narrative since then. There's been no headlines. It's just been this, an oil journalist's, energy journalist nightmare. Oil up on the back of supply concerns, but demand woes continue to weigh on market. I mean, repeat that every day since then. So I don't know. What do you think?
Well, I mean, you still have a curtailment of supply out of Iraq because of the agreement between the KRG and the Iraqi government. Although that's come to fruition, and Iraq has given the blessing for Kurdish oil exports out of the Sayhan pipeline. Turkey's decided not to allow it to happen just yet because they want some guarantees and assurances from the Iraqi government as well. And so now you've got you still have 400 to 450,000 barrels a day of curtailment on exports out of Sayhan, which is supply, at least giving some more support to the market in spite of the OPEC cuts. I mean, the market's struggling to get past $85. It tells you that, the cut on paper, everybody agrees is, roughly 1.1 million barrels, but the actual impact of that cut has not really been realized yet. And I think the weight of lack of economic performance around the world is providing enough of a headwind to keep prices to prevent them from rallying even further. I mean, I think if anything, you have more of a downward bias than an upward bias at this moment.
Yeah, I mean, I think as well, it's seasonality as well that's coming into markets. April and May are maintenance seasons. A lot of the Chinese refiners are down between April and May, so demand will probably be off on March numbers. We've got a colleague of mine in Paris, Humayun, he wrote a piece, OPEC oil exports fall 330,000 barrels a day in March, month on month, dragged down by Iraq, Kuwait, and the majority of Africa. So, yeah, look, I mean, where are we now? 11th of April, in a market that was pricing in severe supply shortages, severe shocks when it came to energy security. It's status quo. It's normal. People thought it'd be New World Order. I mean, perhaps it is on where crude is going. Trade patterns form that when something dramatic happens in the world of politics. But as it did with the invasion of Ukraine from Russia last year. But it's been very stable. almost a bit boring, if you want to
Well,
put another word to it.
I mean, you can look at just at the forward curve structure on Brent itself. I mean, you've got basically between on a 12-month spread, you're looking at only $6-7 a barrel in difference in price. Where when you look at back when Ukraine invasion happened, I think that was up almost $10 to $12 a barrel.
Yeah.
So you do have less of a concern on the backwardation of the curve, showing that, okay, the market is pretty well supplied at the moment. Demand is not really that strong, yet the curve is not pricing any stronger demand on the forward basis. I mean, if you take the narrative that everybody had about second half 2023 would be, oh my God, gangbuster market, demand would go through the roof, yet nobody's pricing that on the forward curve yet. The forward curve still remains in backwardation. Yet, if you were anticipating a stronger demand profile second half of 2023, you'd almost expect the market to go into contango versus backwardation because higher demand, higher prices on a forward basis.
Yeah, that is a very good point. At what point do the majority of economists, ours not included, of course, but the banks, the forecasters, at what stage over the course of the next few weeks adjust their price forecast? Because you're right. I mean, I don't see it being a year of two halves at all. I see it being quite I wouldn't say a sort of fairly dormant year, but I think it's one, I feel like everyone's just sort of coasted through 2023. Nothing's really happened yet. I mean, of course, we've still got a terrible situation in Russia. I'm not talking about the wider macro environment, but in terms of oil markets, if we look at just in the prism of Brent, largely been in a $9-10 range, between 80 and 88 and a half.
Well, I would feign to argue that's more like a $5 range between 80 and 85. Because I think the volatility, if anything, has been snapped down. I mean, the one thing, when you look at Citigroup has actually adjusted their Brent forecast to be between, I think 78 and 85. And yeah. And so they're at, and they're at 85 now. They say, yep, we're at the market forecast. They don't see any upside potential here in their latest analytical point. And part of their
Morse?
Say again?
Is that Ed Morse, the Citi guy?
I'd have to look that up. Who is that from Citigroup who wrote their paper?
But I know that he was somewhat bearish, wasn't he? Wasn't he saying that Brent would pop that down to sort of $60 at one point?
Yeah. And they still see there's more downward potential than upward potential. And yeah, that is Ed Morse,
okay.
Who was the author.
Yeah, well respected.
I mean, they basically see that, and I kind of agree with them, is the fact that anything with the OPEC cut that has happened has actually added spare capacity back into the market.
Yeah.
And so here we are at $85 crude, increased spare capacity. Demand profile still doesn't look that robust yet to justify everything. I mean, if you look at some of the reports coming out from the consumer sector, Apple reported that their sales of computers are down 40% year on year.
That's not good.
But that's also in line with all the other consumer electronic sellers, HP, Dell, Intel, Samsung reported a massive drop in sales revenue. All those consumer electronics have been satisfied by their own internal or external demand, and so therefore people are out spending money, which shows you that the overall economic. Hopefully that translates. If you're an oil bull, that would translate to people having more money to spend on travel or other things because they're not buying new TVs. If you're an oil bear, you say, well, that just shows you that the world economy is not doing so hot. Nobody wants to spend money.
Yeah, but look, if you're a gasoline trader sitting in the States, what's your view with lower energy prices or comparatively to last year? What would you be thinking about, say, gasoline refining margin, gasoline crack positions for the upcoming driving season?
Well, everybody's been bullish gasoline in the West because of what they call the octane story. You've got a market flooded with naphtha, which is low octane. And most gasoline in the United States is 87 octane. That's RON plus MON divided by 2, where Europe sells everything on a RON basis, 95 RON, which again equates to 87 MON, 87 octane in the US. So the octane story is the one that everybody's pinging on because petchems currently aren't producing or releasing the high octane components that create when you cut naphtha through a reformer, where you get reformate. Reformate is the high octane blending component that goes into gasoline.
Where's my geek emoji? Where's my geek emoji? Where is it coming?
We're gonna discuss a little gasoline blending. Your high octane components, alkylates, reformant are your two main high octane components. Your lower octane components are your naphthas, your raffinates, and other parts of the gasoline straight run cut that comes off the crude unit. You mix those two together to make your on-spec gasoline for the standard gasoline specification in most of the world. We're not going to talk RVPs, read vapor pressures, which also have that big translation going into the summer months in the United States as well. But nevertheless,
how do I take it down? How do I take it down?
The octane story is what most traders are pinging on, and that high octane demand is going to drive gasoline margins out of the refining sector. When you look at the actual gasoline demand, it hasn't really recovered yet. As I think we said last week, the data from the EIA shows that actual gasoline demand in the United States is still lagging by about 6.5%, 7% from 2017 to 2019. Now, if that picks up, then you will have a bullish gasoline story. But if consumers aren't spending money and inflation is still hitting people's pocketbooks, we may not see that pickup in demand.
Yeah, because if you look, there's a couple of things. One of my colleagues, Roland, wrote a piece that gasoline in the US gasoline seems like a relatively safe bet right now. And if you look at the fundamentals, as he says, fundamentals suggest that the MoGas balance could be even tighter than last year in Q2. Now, let's bear in mind where we were fundamentally this time last year on oil prices, right? I think this is about the time where we surged. Let me get the chart up. Talk amongst yourselves for a moment. No, this time last year, where were we? $110. We're $110, and it hit the high of 121 in early May. Gasoline cracks went through the roof, and you saw record pump prices at the pump. I think around end May, beginning of June. I think it's around $5 a gallon, and it sort of maintained that. Now you look at it and you'd say, okay, it's relatively good value. Is that solely down to the fact that gasoline margins have stayed relatively subdued or stable, and so has Brent? So I think people can plan a lot better. So I think that people, if they can plan a lot better and not have any budgetary shocks, i.e., come on, Mabel, we're going to drive to the Blue Mountains or wherever they go in the States, we're going to drive to Disneyland. People will be able to do that because they'll say, right, I'm going to put. I'm fine to drive there.
Disneyland because those prices have gone an arm and a leg and a kidney now.
Well, because of DeSantis or whatever his name is, because he's going to tax Disney. Yeah, I heard about that. But look, it's. I think that what will happen is, I think a lot of people, domestic travels is going to be very good, I think. I think that would add to the gasoline driving season story, and I'd be a buyer of US gasoline cracks in summer, Q3. I think that would be a safe bet. Insert disclaimer. We are not here as advisory board, or if you lose money, it's nothing to do with the smoking barrel, do not write in. But I would say that is a relatively safe bet. And then I think international travel, we were away this weekend, me and the family were away for a long weekend at a resort down the road, taking advantage of the good weather and bank holidays and school holidays too. And it was absolutely rammed, and it was so expensive. And, you do DXB. Dubai Airport was crazy. I didn't know what to do. Like, you couldn't get a taxi. People were panicking. People were shouting. It was quite chaotic, but it's still lower than it was in 2019 in terms of number of passengers. I'm not sure the jet demand will ever return to what it was pre-pandemic, but it's certainly coming back. People are certainly out there spending money right now.
Well, airfare prices are still relatively high, but to go back to your comment about people driving, whatever. There is, my counterpoint to that would be that fuel is one aspect of people's disposable income. In the United States, the other aspect is food, because everybody needs to eat. And if you look at the price of food inflation that's impacted not only the US, but Europe, it's pretty well high. It's high. Commentary that one of my cousins wrote. We were coloring our Easter eggs, and his comment
Right.
was, "Wow, if those are real eggs, that's too rich for my blood." Because when you look at the price of eggs in the United States, I think they're up like 300, 400%. Uh,
Yeah, I think it's a global problem that actually. Yeah, you're right. Yeah,
and
yeah,
so when
yeah.
you start adding in that cost of food, which, food inflation is the biggest worry I think the IMF has, as well as the UN has, because okay, you still have a tenuous agreement on grain exports out of the UK, out of Ukraine and Russia, which
Hmm.
looks like that's going to become even more problematic as the major grain traders have decided to pull out of Russian trade. So Cargill, Bunge, ADM, Louis
Mm.
Dreyfus are no longer going to buy and ship Russian grain or trade Russian grain. That just adds more, say, fuel to the food inflation fire, which is going to impact people's disposable income. I mean, so yes, people are going to travel, but I don't think you're going to see the mass traveling that we've seen in the past because it has become more expensive to make a trip.
Yeah, I mean, I think you're right. I mean, look, again, coming back to a seasonality, a point I made start with Ramadan, across the world, especially in the Middle East, of course. Iftars are a big thing, when people break their fast. People, the price of grain does have a seasonal pop because, breads that they make or whatever might happen. But you're right, in terms of wheat prices, and especially the Red Sea, um, massive importers of Ukrainian grains. I haven't followed it. I haven't followed what's happened if that's taken a pop. I'd imagine it probably would. And then we've got Eid coming up, depending on the moon sighting at the end of next week. So yeah, look, it's certainly one to keep an eye on. Just staying within the Middle East, if we can. Rumors, news, not confirmed, unconfirmed, not sure, maybe, probably, definitely. Our Zour refinery down in Q8?
Um, that's a big question mark. A lot of rumors. There is no smoking gun yet to be seen. Um,
Yeah,
I mean, if the
yeah,
refinery had some type of incident, obviously there would you would think that there'd be some photograph or some Twitter of a flare going off at the refinery. Because in my experience, when you're at a refinery and there's a problem, the first thing that happens is feed gets thrown into the flare, and then you start shutting things down in a controlled state. If there was
right.
a incident of some type where, like, let's just say worst case scenario, a unit has an explosion, of
Mm.
course, that type of headline would actually capture a lot of viewing as well, because Al Zour refinery is not a small refinery, and if
No.
you've had a incident of some type that shut down the refinery, that would be, I think, plastered all over social media.
Yeah, I mean,
But
look,
yet, in
just
my research, I have yet to see any picture or any type of Twitter or anything else that shows Al Zour having a problem.
yeah,
I've
and
heard
look
rumors.
for the uninitiated who don't have a clue what we're talking about, who may be listening and want to clarity. Al Zour is a big new refinery in Kuwait. They recently, it's a total of 600,000 barrels a day. Two of the crude distillation units are up, so say roughly 200,000 barrels per CDU. In March, they exported 8 million barrels of products, including 4 million of fuel oil, very low sulfur fuel oil, which is the stuff that, as you know, Russ, better than anyone, is used to go into ships these days. And it really had an effect. Why are we talking about it? Because the refinery oil isn't used, obviously it's a big thing for balances. There'll be more crude in the market or more straight run fuel because the refinery will be down or whatever will happen. And there'll be less products. Now, what's happened this year with the Al Zour refinery's impact on the Fujairah bunker market has been quite profound. Premiums have come off mid-20s as they were in December, and they hit a low of flat -3 to flat because there was more supply in the market, and
Well, I
it is
mean,
a market.
and it does have a
Go ahead.
knock-on effect into Singapore, because the Singapore wholesale retail spread, i.e., what you can buy FOB versus what you can sell to a retail bunker consumer, dropped from $38 a ton to $13 a ton over the
Right.
last 2 months.
There you go. So that's why we're talking about it. The problem is, as Russ said, is that it's no one's sure yet. We're not sure. People have come to us. Traders have come to us. We think there's the second CDU. We're hearing market rumors. Again, insert disclaimer. is that the CDU is down for a month. We don't know. I don't know. I think there does need to be some clarity around it soon from the Kuwait authorities. But I mean, that's up to them. It's their decision. But yeah, look, it just goes to show you still how sensitive things are. You know, like I was saying, the Fujairah market is a nice one to sort of look at as a case study. Anyone who's, you know, wants a good example of an organic market that is relatively balanced vis-a-vis supply demand, it is Fujairah. You know, the two refineries that are based there are able to supply the majority of the demand that Fujairah aggregates. And then, of course, you had the Zour material coming in, and of course, there was excess supply, so prices premiums dropped. And now they're coming back because no one's really sure what's happening with Zour. So, look, it's one we're certainly keeping an eye on. I suggest other people do as well. It's fairly profound, like I said, for what's happened to the majority of the bunker trading community here within the Middle East, really, because the refinery also supplies the Zour refinery also supplies Qatar with the bunker supply that those big LNG boats need. So it's a far-reaching story. So wait for clarity. You heard it here first at the Smoking Barrel. Insert another disclaimer, please, Edwards. What else we got cooking? While we stay on that, we spoke about Brent earlier on and what's happened in the last week, and we spoke about shipping last week with its, you know, what would happen with tanker rates and they came off 10%, I think you said, or 10 points. What's it like this week? Is that fairly stable as well?
There has been a value erosion on tanker rates, but they're still I'm going to say fairly robust. When you look at the FFA curve, they're actually they took about a $5,000 TCE hit,
Right.
which you think, okay, that's not a big deal. That's $5,000 a day change in value, but nevertheless, they're still at very good value. When you think that most tanker operators operate anywhere between let's call it $18,000 to $25,000 a day OPEX cost, and you've got forward freight rates at $50,000 a day, happy day if you're a tanker owner. And I think that's going to maintain. Because the tanker story is not so much a story of, it's a story of crude supply into the market, because the more crude you have supplied, the more need you have to ship it on tankers, because most of your refining base of the world does not have crude supply. But nevertheless, with the impact of the bifurcation of the Russian market and the Russian exports versus non-Russian exports, you've got a relatively tight fleet of ships. And therefore that creates a stable, at least a high earning, stable environment. I think if you have an economic slowdown, okay, that will have some impact, but even with, tanker rates make even a comeback in a low earning and low economic growth environment, because if you have any type of contango, that's just your secondary storage is on a ship. When you flip the script into the dry bulk container rate markets, they're still showing very low demand. Chinese consumption of raw material hasn't really picked up yet to reflect the economic growth forecast that everybody has for the second half of the year in China. That can always change on a dime, but I think raw materials aren't shipping as well. If you've had this grain issue now with the likes of Bunge, Cargill, ADM, and Louis Dreyfus, who are big charters of grain ships not lifting Russian grain, and that could just add more spare capacity to the dry bulk fleet, which puts pressure on prices as well. Because where are those ships going to come from? They're going to ship that Russian grain.
So sell freight, buy wheat.
Yeah, probably. Not that we recommend trades on this program, but directionally, being long food is probably not a bad place to be.
Onion futures. I had that plan a few years ago, and I read some story. Someone then came to me. I wrote it on my commentary about setting up an onion futures contract and spreads like white versus spring onions and all that kind of crap.
Well, you have to have Vidalia versus Ruby Red. You have to have spring onion versus
mate. Don't even get involved. I've already patented this. And then some geek came back to me on my commentary about 10 years ago and said, actually, there used to be an onion future, and the market was concerned about it being cornered. And I was like, okay, I lost interest. But no, look, I mean, I think what we need to do is the second series of the Smoking Barrel. We need to set up an ETF all these trading tips we're giving, everyone's going to be minted.
Well, I can tell you
Yeah,
the one thing that's interesting, though, if you look at what's happened in markets and risk assets over the last couple of trading sessions, because especially with all the volatility being put around with, are banks going to go under? What are the central banks going to do? Is there going to be a Powell pivot, a Powell pivot in 2023? There's a slip for you.
same meat,
You look
different
at
gravy,
Bitcoin.
mate.
Bitcoin's crested over $30,000.
Yeah.
Which you think of, is that new age versus old age traders? You've got gold over $2,000. I mean, to me, you got to think that's people looking at the instability being created by central bank activity and people looking for safe haven assets. I don't know if I'd still call Bitcoin a safe haven asset, but nevertheless, there is a bit of a interesting turn of the coin there because Bitcoin was trading at $16,000 only a few months ago.
I know it's up 80% since the start of the year.
Yeah.
And why? Why? Why?
I
don't
honestly,
know.
I think it's people looking at it as a way to, support themselves versus interest rates and rate hikes.
Yeah, maybe. I mean, look, I know the majority of listeners and viewers are probably going, "I'll get with the program, Stanley. It's no longer 1998, pal." Arsenal won the Premier League in 98. I'm just saying, we're still top of the Premier League now. All right. So 25 years later, still got it. Anyway, enough about Arsenal because it's a delicate one at the moment, really. No, yeah, I think you're right. I think that's a demographic thing as well. People, like you said, I'd like to see the age split of those who are buying gold versus those who are buying Bitcoin. I reckon it's probably a 40-year spread. At least. One reads the newspaper, the other watches Instagram. It's going to be an interesting, kind of split. What will happen there? The new people coming in. I think Bitcoin up 80% since the start of the year. There have never been any fundamentals you can really apply to crypto apart from, well, it's going up today. All that nonsense. It's just the new, like you say, it's the new gold. I'd imagine people not sure. Are people now pricing in a May rate hike? Non-farm payrolls were out Friday. They were good. We've got some data coming out this week, right, Russ?
Yeah, we got the CPI data from the U.S. coming out on Wednesday. We've got China's CPI just came out showing a deflationary move, not so much inflationary, which it shocks a few people when you read about it because you'd think if you're going to have growth, you need to have inflation. But if inflation rates are dropping, then that's not cueing strong growth. It tells you that there's no demand for goods or low demand for goods inside of China.
Yeah. I think the one thing that the one part of the week with data wise, everyone's really going to look at, like you said, you got the CPIs. I think the market will really pick through the details of the meeting minutes from the last FOMC for any hint. I mean, are they pricing in another May rate hike with relatively strong data that we've seen out of the US over the last couple of weeks?
Well, I think the market's pricing that rate hike already, 25 basis points.
Yeah.
I think that's the overall consensus. I think the biggest piece that the market is trying to convince itself is that there will be a pivot by the Fed going into the end of the year. People are jammering about the Fed has to pivot because the economic turmoil is being caused by higher interest rates. The Fed will have to pivot. Other central banks will have to pivot. I think the IMF put out a report that the world will have to start lowering interest rates soon. So there's a lot of concern with higher interest rates and the actual state of the economy, which says that a lot of business has been built on a low interest rate model, which makes them unsustainable when you get above a certain point.
Yeah. No, I think you're right. And I would argue that is probably why the second half rhetoric regarding oil pricing is what it's largely based on. That people think, and I would agree that we're coming into as you said, we're coming into the end of the rate hike cycle. I think that's probably if there's one in May, I've got a feeling at the minute, and this is what I mean about the minutes being so important. I think that argument or what the Fed do, what Jay Powell does, in terms of hiking rates and how the board look at it, the FOMC look at it, it would be that's enough. You know, let's let things settle. Sorry. Let's let things settle. And I think let's have a look what Q3 data looks like. And then coming into Q4. And I just think once things stabilize, I think that will give the boost in demand if things start to come off. And that's why I think people have got this forecast on this game of two halves. You know, I mean, look,
Well,
at the end of the day, it's still above 80.
If you're betting above a pivot, if you're betting about a pivot, then yes, you're going to have stronger economic growth, or you're going to have stronger pricing action on crude because lower interest rates will facilitate trade, which will theoretically increase demand. Therefore, people will be able to move cargoes and trade oil and not have the same economic impact they're having right now. Because if you look at it from a trade related standpoint, high price crude with high interest rates means your financing costs have gone up exponentially from where they were when crude's at $60 a barrel at 0 interest rates. Yeah. So you have a double knock-on effect. Now, dropping the interest rates, that will should theoretically stabilize crude prices because, again, it stimulates demand across the board. Yet, if you don't have the consumer demand to help support that economic demand of factory production, then lowering interest rates really will do nothing except stimulate more inflation.
There is that argument. Look, yes, you're right. Let's see what the minutes hold. Let's see what the rest of April does. I want to thank everyone who supported, viewed, liked, commented, subscribed for the first series of The Smoking Barrel. We'd managed 10 episodes. Shocking. You people want more as well. We've tried to be controversial, but you keep on asking for more. So we'll be back. When is it, Edward? We'll be back early May, right, with season 2.
We're coming back in early May. We're going to take a few week break as we've got holidays coming up, and that's going to make things miss. So we'll take a 2-week break, come back here in May, and start season 2. Hopefully season 2 will have a bit more excitement to talk about other than $80, $85 crude. Well,
maybe. Look, season 2, more of the same, maybe some guests.
Oh, well, that could be the step change we go into. Maybe some guest speakers.
Maybe some guests, maybe some polls, maybe some shorts. But look, thanks for everyone for watching, enjoying. We enjoy it too. Please consider subscribing if you haven't already. Please like the video as well. That really helps us out. And have a good rest of the April. And I'll see you in May. And make sure you spread this around to all your friends and mates as well, especially if they want to have more commentary around the oil markets. And a big shout out to Irene. Yeah, always. And we will speak to you guys later. Enjoy the rest of your trading week. Ciao.